Imagine you have 35 million. You want two things. You want to buy land, but you also want to invest in a treasury bond on that 35 million. What would you do? And this is the question I got, one of the messages I got on Sunday from Winnie, who is doing an incredible job in her agriculture journey. And her dilemma was, Alex, I have my 35 million. I want to use it. I'm looking at this 35 million as a way to get me a treasury bond, at the same time enable me buy some 5 acres of land where I want to do it. And when I got to this question, it got me thinking on how many people know how to do a proper financial planning when it comes to some of these challenges that they end up facing. Now, of course, it took us going through certain numbers, me going through certain numbers, for me to come up with a proper solution. But let me start from this perspective. Many people can borrow money using treasury bonds as security. Very few people know about it, but it's extremely possible, and the interest rate you end up getting is really indeed good. When you go to borrow right now from so many different banks, and you are a salaried person and you are using your salary as the security, you end up getting around 18 to 19% per year, reducing balance. Very good. If you go to borrow right now, when you are taking land as security, you end up getting a loan of close to interest rate of close to 22-23% because of the risks. And even the way they value the land, they value it at a rate that is lower. The first sale value, right? It's what it is. When you go to borrow right now and you're using your matrimonial home as security, you might even get less money and a higher interest rate, because historically matrimonial homes have been hard to sell in case of a client failing to pay. So you might even end up getting a 24-25% interest rate. Yet right now, if you go to borrow from any commercial bank using your treasury bond as security, the worst interest rate you might get is 17.5. And if someone ever gives you 17.5 and above, do not take it. There are so many banks that you can get interest rate as low as 16%. And if you are taking a little bit more money, you can even get it at 15.5 and 15. Right? The last in June, we worked with one of my very VIP clients to secure a treasury bond loan at an interest rate of 15%. Negotiate the management fee to come down. We had to negotiate a few things. We had to work late in the night to kind of get the bank on the same table. We have done the same this July. I'm doing the same for one of my other VIP clients who is trying to get potentially it might land at around 15.5. You know, at a lower management fee, at zero insurance. So when Winnie sent me the question that she has just 35 million and she wants to use this money to get the bond and also buy land, the conversation is zeroed down to two things. 35 million right now, how much can it get her? How much can it get her in treasury bonds? And I end up using the 20-year bond because it's a discount. If she has 35 million right now in treasury bonds, she would end up she can easily get around 37 million on the 20-year bond, the 2043. It has close to 16 years to go. Right? Which then means every single 6 months she'll get 2.4 million in coupon. Net. Yes, right now the 20-year bond is at the discount. So she can get the discount of 1.5 to 2 million, depending on where she buys it and how much the yield to maturity will be. But the reality here is the coupon rate will be just 2.4 million per every 6 months. Now, the rule of thumb, when you are to borrow using treasury bond as security, which means the bank is going to use the coupon rates, the coupons as a repayment for your loan, they take a maximum of 90%. a maximum. So if your coupon is 2.4 million, maximum is 2.2 they can take. So if you use the 20-year bond, which has around 16 years to go, that means you can secure a loan of up to 15 years using the coupons as the payment for the loan. Now, when I asked Winnie how much is the land she wants to buy, she says it's between 28 to 30 million. Now, unfortunately, if your bond is 35 million and it gives you 2.4 million every 6 months, and the maximum the bank can take in a coupon is 2.2, it means for 15 years, the total amount of money you can qualify for, total, as a loan using treasury bond as security, is around 26 million, 26.5 maximum. And that doesn't factor into the interest rates, the management arrangement fees and insurance. But many times you can waive the insurance, right? It's a cash cover. They have the bond. They can sell the bond in one single day to recover the money. So no need for that insurance. So then it came down to this position that if she gets the whole 35 million to buy a treasury bond, she might get a treasury bond of close to 37 million. Or if she buys a 25-year bond, she can get a bond of 33 million because the 25-year bond is at a premium. The only difference is if she buys a 25-year bond, then she can get a loan of 20 years. Now if she is to buy, let me give you the numbers here as they would be. If right now she is to buy a bond of 32 million, because the 25-year bond is at a premium, she would be getting 2.3 million from the 25-year bond. The 90% rule still applies, which comes to 2.1 million. But the difference here is she can get a loan for 20 years. And if she can get a loan of 20 years, she will still qualify for around the same time, around 27 million. So it's the same. It's the same. So realistically speaking, if she wanted almost 95% of the money that is needed to buy the loan, to buy the land, then the wisdom or the guidance I would give Winnie and people who might think like her, yes, of course, you get that money, go buy your treasury bond. Get your 35 million, go buy the treasury bond. Buy it today, the next day, get your loan. Now, the circumstances are different for each and every person. It's not the same. So engage, talk to someone who understands these numbers to work out a scenario for you that can easily be supported by the numbers. Otherwise, you might go all in only to be challenged by the circumstances for your deal not to give you a goal. If your ultimate goal is to buy land and the money you might get in loan is not enough, then use the money and just go buy land. All right? At least for Winnie, she's trying to buy land for productive measures, that in case whatever she puts on land works better, she can even repay the loan and take off the stress from the loan, from the bond, and she recovers her coupons long term and enjoys those too. So there are so many different circumstances for us to look through this that can enable someone make a more informed decision.